So as you took the trade here, many people will use a big lot size and they won't think of what will happen between where they entered the trade from and below. That is one thing that fails many traders. Okay, always plan for the unknown. The life itself we're living in, okay, a lot of things are happening. The ones we are already aware of. What we are fighting for right now is what is ahead of us, the mystery ahead of us that we have no idea of. So you must apply the same principle so you don't be among the 90% of traders that fail. Now, when you go into risk management, anybody that make this will tell you that risk 1% of your equity and blah, blah, blah. Mostly that's what they say. But it go beyond that. Okay, so when you get to risk management, we are going to look into that seriously. Okay. So what is trading? Some of you have limited your mind to the extent that because you had Binance, Bitcoin, okay, most of us, okay, let me say most people wake up or try to get the concept of trading when BTC started one way or the other doing well. So when they say trading, nothing comes into your mind again. But the whole trading market, currency, commodity, stocks, is over 2.4 quadrillion. Okay. Now, when we take the Forex market alone, okay, we are just going to talk about the Forex market alone. We have $6.6 trillion. That is what is circulating. 6.6 trillion is circulating each day. So it is termed as the largest market. And it is the truth. Okay, crypto went as far as 3 point something, let's say 3 point or 3 plus trillion, and corrected. I wouldn't say crash, because these are some words that scare people. Okay, why is it crashing? Why did they say it's crashing? I'm a trader, so I wouldn't say it's crashing. Investors will say it's crashing. But traders, we have opportunity when it is going up, okay? And we have opportunity when it is selling. So as it is selling, I have opportunity to look for a sell. And as it is buying, I have the opportunity to look for a buy. But investors, they only want it to buy. In trading, you make money when it is going down because you can sell. You make money when it is going up because you can buy. Okay, so put it in mind. Now, a lot of people feel that because 6.6 trillion is circulating each day, they can just go and make 1 million with $100. That magic it can't work. Okay. So in our class, you will be learning how to draw plan. Okay. How to draw plan. How to approach trading professionally. How to make provision and preparation towards these things. You enter the market here. Let me take it off. You enter the market here, and the market have to come all the way here and then go into your direction. Another set of people, another mistake, or mostly what they do is that they don't set their stop loss well. They don't set their stop losses well. So market to hit their stop loss. Then, one way or the other, they will say it is not good to set stop loss. And due to that, they leave the trade open. When they leave the trade open, what happens? Market is going against them. Instead of them to accept a loss, they won't accept the loss. And one way or the other, the money is gone. And the first thing they will do is they will blame the broker. It's my broker. Now, we are going to talk about what is a broker. I'm just giving you, I want to open your mind to what make it look like it is not possible. What makes people think it is a game that is not safe? Well, trading is risky one way or the other. But what is more risky is not understanding the risk. And you can only understand the risk by experience. Trading is difficult. That's what they say. But to me, now it is simple. Because it has principles. It has what is called indicating principles you have to follow. Once you follow all these principles, what happens? You do it well. How do you learn driving? How do you learn that medical course? Pharmacy, accounting. You follow principles. You follow formulas. You follow guidance. And it took you not less than 4 years to complete that course or those courses. And you want to use 1 day to master Forex trading. Is that possible? Drop it in the chat. I want to be seeing the chat. Is that possible? You want to use 1 day to master trading. Okay, let's be realistic here. Now, it took you from crèche to class 6. Okay, let's say preschool. Then primary. Let me use the Ghana system. Primary, junior high school or high school, then secondary school, then tertiary. Count the years to start making money. Okay? The next point is those who introduce them to trading. Okay? The person who introduced you to the industry. The person who introduced you to the industry. That's the next point. Okay? How the person introduced you to the game is how you approach that game. And if you are not lucky, you will feel it's not working. All right? Then, who trained you? Personally, somehow, some way, I was discouraged at a point. But I look left, right, front, back, north, south, east, west. There's no option. So I have to go to the internet. I have to go back to the internet and look for what works for me. But the point is that the internet has 99% information purposely for marketing. So what you are looking for on the internet, unless you know how to surf the internet very, very well, before you can get the right information about Forex trading. Okay, so that is it. Introduction. So if it didn't work for you before, refresh your mind. Okay, it will work for you now. Don't blame yourself. Don't punish yourself so much because it didn't work for you. All right, so that is just my preamble to Forex. Now, what is Forex? It's all about FOR is foreign, EX is exchange. Okay, so it's something we do daily basis. Now, let me use a concept of Forex Bureau. Your auntie travel from the US to Nigeria to Ghana to Zimbabwe and bring some few dollars. Then you go somewhere to exchange that dollar to what? Your local currency. You have traded Forex. That's all. We do our own algorithm-wise on the internet. Okay, so the advantages, you don't need an employee, you don't need to have license, you don't need an office. Okay, so if you want to set up a Forex Bureau, you have some capital requirements. You need to have an office, labor cost, employment, employee, and all those stuffs. In trading, it is convenient and you can do it anywhere in the world. Okay, so those are some of the advantages as well. Now, it is not a get-rich-quick scheme. Okay, so as far as your job you've been on for 7 years, it's not making you rich quick. It means that Forex trading is also not going to make you rich quick, but it can. Okay, now, one thing in Forex is that histogram, okay, is how it is. And you must understand that it will not be up forever and it will not be down forever. So how you are able to get a concept that is going up, or how you get a concept that is unstable, or how you get a concept that it is coming down, determines who you are and how you approach the game. Now, what are the tools you need to trade? Okay, a lot of things will be coming up as far as the class keeps going. One of the tools you need is your mobile phone or laptop. Okay, don't limit yourself because you don't have a laptop. Once you have a phone, if you want to see what I'm seeing, you just rotate the phone or turn the landscape, you are good to go. Those are the tools you need and a good internet. Then we need broker. The broker is the intermediary, or is acting as an intermediary between you and the market. The broker is an intermediary between you and the market. And the brokers, they run on charting softwares like MetaTrader. Okay, so when we mention MetaTrader, we are only talking about a charting software that brokers connect through to you, through your phone, for you to be able to see the chart. We have two types of MetaTrader. We have 4 and 5. Okay? We have 4 and 5. Now, you can download that now, no problem. Okay? You get used to how it works along the line. MetaTrader 4 and 5, you can get it on Linux or Uni apps or softwares. You can also get it on Windows, Apple, or Mac, and then iOS, Apple Store, Android, Huawei. You can get it on all of them to download. It also works on tablets. If you're using a tablet, the version looks like more or less like the PC for you. So it's an advantage. Okay, so on the MetaTrader platform, we have what we call charts. Okay, so we have 3 major types of charts, and the common one we all use or mostly use is candlestick. Okay, so let me just zoom out. Okay, so what we're seeing here is candlestick. Now, why is it a candlestick? We all know how candle look, and unfortunately, candle is not common these days. So candle actually have 2 wires, two how will I mention it? Let me say yarn. Okay, yarn or rope. Okay, I think yarn is the best. That passes through it. So You light it here because this is always longer. Then this one is more or less like where it sits. Okay, I believe that is the concept. Okay, now along the line, the size of the candle and how the candle open and close, we're going to look at that, determines the action you're supposed to take. Okay, for instance, what happened here is harami. So when that happened, there is something you should do. And then what happened here too has a name. What happened here has a name. What happened here has a name. This candle has a name. Then this whole candle also has a name. And there is a reason why it keeps going up. This has a meaning. There is a reason it's coming down. This has a meaning. There is a reason it's coming down. This has a meaning. This has a purpose. This has a reason. This has a reason. So the ability of identifying the candle and how to combine it, it's one way to be successful in the industry. Okay, so let's keep that one to there. The next thing we have is called the line. Okay, the line chart. So we have the candle and we have the line. The line has an advantage to those who know how to deal with patterns. Okay, along the line, we're going to look at patterns or trading by pattern or with pattern. Okay, so the last one major is the bar chart. Okay, it looks like bar graph. I don't know how to use it, but people know how to use it. Okay, a lot of people who know how to use it, they utilize it very well. Okay, so this is what you will see. We'll get to the mobile phone on Wednesday, and you see how the mobile phone version looks like. Now, once you start seeing this, it shouldn't look scary for you. Okay, now quick one. We have people who have color codes. You know, they want to know how what it means that the candle is going up and down. We're going to look at all those stuff. Now we have some other charting systems. Okay, like TradingView. That's also one of the common professional. Okay, professionals use it more often to do analysis, and they have reasons to do it. I actually use it. I'm going to show you the interface as well. Now we're going to get a time where we're going to deal with the interface of this platform already, so you should be able to know and use it. Okay, so when they say introduction to Forex, all these are almost done with it. Now, the next important thing is how to buy and sell, when to buy. Okay, so looking at it, how to buy, first you must identify where market is going. But before you identify where market is going, you need to know where it is coming from. Now, whenever you know where something is coming from, you should be able to anticipate where it is going. All right, so the common way they taught us, especially Africa, those who use the left-hand driving, the best way they taught us to cross the road is look to the left, to the right, to the left again, and you cross. Okay, I believe. Now, keep it in mind. Anytime you visit the chart, once you grow, you visit the chart. Tell yourself, look to the left, to the right, then to the left again. Because the car is coming from the left is closer to you than the one coming from the right. So once you're able to confirm, now, why do you need to look at the left? So in this market, let me just zoom in. So at this point, market is coming from somewhere here, and you are here. You are here, and market is going towards a direction, or will go towards a direction, either up or down. So what do you need to do? Concentrate here and see where is market coming from and what confirmation is it giving me, what nature is it giving me. Then you use that mindset to project the next direction. Okay, so those are mostly things that we'll be playing around with until we know how to do them very, very well. Okay, now if you're looking at how to, let's say after this class, some of you are on my platforms and you are seeing signal, okay, and you want to be playing around it, it's a good idea. Watch carefully. Now we only have two options here. We have sell and buy. Okay, now the asset you are seeing here is not currency, so don't bother yourself so much. We'll talk about that as well. So you have a buy and sell. In between here is what we call the lot size or the volume. Okay, we are going to talk about all those things for you to know their role, their purpose, and every other stuff. Then we also have a new order here, okay, which you can also click and make some decisions in the market. Now, we have what we call pending order. Okay, many people, everybody can trade actually, regardless where you work, what you do, and every other stuff. Everybody can trade. What can you do? You can forecast the market, analyze the market, and set a pending order. You can analyze the market, forecast the market, and set a pending order. You set that pending order with your stop loss, your take profit, and when market gets there, it will take the trade for you. And the probability is that it either goes towards your stop loss or it goes towards your what? Your take profit. That is it, as simple as that. So when it comes to that, you go in for pending order. Now we have types of pending orders. We have the buy stop, we have the sell stop, and then we have buy limit and sell limit. Okay. Now we also have what we call stop loss and take profit. Most of the terms will keep repeating themselves: entry price, stop loss, take profit. Now let's look at this market. Let's say you are trading, you are in this trade from here, and markets come all the way here. We saw the profit was around $15 each, giving almost $30. Okay, and then you are watching the market, and one way or the other, you are looking at stopping the trade, taking the profit, like closing the trade in blue, and you just want to go and take water and come, and the market reverse, or you want to wee wee, you want to pee, and the market just came back all the way here. How will you feel? Okay, so you set take profit in case market gets to that place that you anticipate to take the profit, whether you are with a machine, Nigerians, NEPA goes off or not, your machine freeze or not, your data finish unexpectedly or not, you should still be able to close the trade in profit. So your broker closes the trade for you in profit because you've already ordered him or ordered them to close for you. Then another thing is stop loss. Now, when you make projections, you have to what? Leave room. Okay. I'm forecasting that it will rain. And does that mean I should throw all my waters away because I think it will rain? No. You need to leave some barrels there. In case it didn't rain, you should still be able to get water. Okay. So because of that, you can now just say my projection is accurate 100%. No. You cannot be right 100% in the market. So what do you have to do? You set stop my loss. Now, this is why a lot of people get it wrong. So many people started trading with options, binary options. It's more or less like prediction. In 2 minutes time, a market will go to maybe price A or B. So if in 2 minutes time, market couldn't go there, you've lost your trade. Okay. So people always feel that it's risky, but in trading, you can decide how much you want to risk per trade. That's why I said most of the most topic we're going to treat more often will be stop loss, take profit, risk management, risk to reward ratio, money management, emotion. Right? So those are the things that actually change the game for every trader. As simple as that. Okay. So your stop loss now prevents you from losing more than you want to lose. Okay. Now let's look at it from here. The trade is running now. This is a practice account. Okay. So we have what we call balance, equity, margin, free margin, margin level. Okay. Then we also have the trade being profit in the corner here. So this is the balance. You've seen that the balance is stable, but the equity is moving. Let's focus on just those two. Now, what's happening right now is that I'm in a trade, all right, but the $32,000 is not at risk. What is at risk is the stop loss I set. This account stop loss is $100. Okay, so what is at risk is the stop loss I set in relation to what we call lot size. We're going to look at that. Okay, don't worry. So what I'm trying to tell you is that if you are trading with $100 and you are in a trade, it does not mean you are losing all the $100 per a decision in the market. The $100 is more or less like a cushion. And if you decide, I want to lose $5, $10, 25, 50, 100. Some people decide to lose all their money in a trade. Okay, so this calculation now goes with what we call your RR, risk to reward ratio. Okay, so stop loss, take profit. I want to reach $5 in this trade. I'm looking to earn $10. So we have a common interest here. 5 goes into A1 and goes into 10, 2. So we have risk to reward ratio is 2. So I'm risking 1%, I'm getting 2%. I'm risking $5, I'm getting $2. Sorry, I'm risking $1, I'm getting $2. So at the end of the day, as far as you have accepted the $5 loss and you set your stop loss, when market is going against you, the broker will close the trade and your balance will now become $100 minus 5. But if the trade goes and hits your take profit, then you are having $100 plus 10. Then your balance becomes 110. When you take the next trade and you lose $2, then your balance becomes 108. But if you win that trade, your balance becomes 115 if you are looking at $5. So when you keep repeating that, it means that your money can be growing and will not just crash at once. That is one conflict we need to understand about trading. Okay, so we have a lot to learn along the line, and I just want you to follow keenly so that you get every information for yourself. I believe all people also learning something new. Okay, now the other chart is trading view, and this is not how it looks. On default, it's actually white background. Okay, but I always like to use black background. Yeah, for my personal reasons actually, or health. So When it comes to trading, this is currency, so we can see something real. Okay, we always have two pairs. Okay, we always have two pairs. So what we see here is BTC and USD. So in most cases, you see three combination. So they pick three alphabets from the word or the currency and put it together. Okay, so just like those who take flight, usually you see there are some keynote to wherever you go in and stuff like that. The same applies to trading. So those are accepted letters or phrases we use. Now, when it comes to BTC USD, see, this is BTC and this US dollar. And you are seeing something like 23. Okay, so 23,000. So what does it mean? It means that when you take $23,000, you can buy one BTC. So this one becomes what we call the base currency. And then this becomes the quote currency. Okay. So the quantity required for you to buy the base is the quote. Now the twist is that as far as the base comes first, if there is a financial strength in favor of the base, you will see the chart going up. Okay? Simple. And when there is financial strength or economic power on the quotes, you see the chart going down. Okay? So BTC USD, when it is selling, this one, there is US dollar has power. Okay? At that point, if they were to use USD BTC, then you see the chart going up. Okay? So the opposite is happening. And now the normal is happening. Okay, so that is, so you hear people saying currency pair. This is how a currency pair is formed. Now, when you're looking for examples, you see Euro USD. You see Euro USD. Okay, so it means that Euro is trading against US dollar or vice versa. Okay, so when Euro is in power or having power over USD, then the chart will be going up. And then if USD is having power over Euro, then the chart will be what? Going down. Okay, that's what it means. Now, if the chart is going up, then you have to buy. And when the chart is going down, you have to sell. Okay, if the chart is going down, you have to sell. And when it is going up, you have to buy. Now, when you go into currency pair, please go to babypace.com. You can get some basics of some information about trading. I'll drop one very important introduction course. It's already in the videos on the Telegram platform, but I'll still drop it so you can watch. Okay, so we have different types of currency pairs. We have the major currency pairs where you see the most traded currencies, the exotic pairs, and the cross pairs. Okay, so those are the most traded or things you'll see. Unfortunately, you won't see Naira and CD there. Okay, you didn't get to that level. Now, let's look at some few features and we take it, call it a night. So at this point, this particular charting website or system has more than ways to see the chart, unlike the MetaTrader that gives you free. Okay, now this gives you a lot of advantages, but if you want to see more, you have to pay. Okay, so you have the premium service where you have to pay averagely 18 to 90, or let's say averagely $20 a month. So before you start spending money, please be making some money. but you can download the free, the free version. You can sign up on the free version, and then it helps you do some of the things I'm also doing. And then if you feel, or if you get to that level where you think there's a need to buy, you can actually put in the money. So aside the first three, we have the bar, the candles, and the line. We have the holo, and then the holo is just more or less like the way the candle formation is. But when you look at it carefully, the holo observation and how it reacts to the candle is different. Okay, when you look at it carefully, it's different. Okay, then we also have a column, it's some way. Then the area. So the area also have its own advantage. People use it for their decision making. It helps them identify the base. Now that's stuff. Then we also have the baseline, where market gives you proportion or direction that, okay, I'm in the range of a buy, I'm in the range of a sell, I'm swinging low and all this stuff. So it means that currently, if market gets to this level, we'll say it is crossing the base to become bullish. Okay, so that's also some of the effects or advantages of this. We have the Hekinashi. We have we have some strategies for Hekinashi: Renko, line break, Kanji, point and figure range, and so many. But mostly, what you'll be hearing or listening to or use more often is what? The candlestick. All right. So on this note, I'll stop here and take question. If you have any question for me, raise up your hand, and then I'll call you to ask the question. I give you the answer, and we'll call it a night.